So in the last chapter, we talked about coming up with your business idea. Now we're going to talk about the very specific points to getting ready to launch. And I'm probably going to slow down because I just want to make sure there's a lot of rich content here. I don't want to miss anything. Um, the first consideration that you might have is, should you keep your day job? I really want to cover this in detail. Um, a lot of business owners that I know started their business part time while they worked full time. And I really like that because it's a way to minimize the risks of starting. I don't think there has to be this all or nothing approach. In fact, I reject that completely. So if you can start a business, and you might not be able to do this with a retail store, but if you can start a business part time or even from your home, that's a nice way to minimize your risks. Remember, running a company is all about risk. You're taking a risk just being out there. So anything we can do to minimize the risk is good. So starting a business part time is not a bad idea. Um, when you're thinking about starting a business, you want to make sure you have enough money to pay both your household bills and your business expenses. Um, People get this wrong. I've gotten this wrong. Uh, it's not just about what's on your profit and loss for your business, but it's also what are your household bills. So when you make the leap to start a business, you got to make sure that business is going to cover both of them. And if your business won't cover both your household bills and your business bills, you're going to need to get capital. Another very important consideration or sort of startup consideration is to get buy-in from your partner or significant other. If you don't have a significant other, then we can skip this section. But some people do. So um, really, both parties or multiple parties understanding what's going to be involved. So if you're starting a business, you might have that other person take this course with you. I don't know. But I guess the point is, on a serious note, you got to get buy-in from your family and have everybody understand that it's going to take time to start a business. A couple of very specific points here, and I'm really reading off a teleprompter, so this is a really good notes. I don't want to miss this. Um, if you think you're going to be successful in your business in 2 years, I would allot 4 years. It usually takes about twice or maybe sometimes three times as long to get that business profitable as you think. I mentor a lot of would be or will be or soon will be entrepreneurs. It's amazing when you look at their cash flow forecasts, they all show a small profit by the end of year one. Um, Usually it takes 2 or 3 years to get a business consistently profitable. So it's going to take some time, and you want to have buy-in from your loved ones. Identify a mentor, big deal, and it speaks for itself. I really wish I had done that. I could have avoided thousands of mistakes. If you can get someone who's experienced as an entrepreneur, who cares about you, who cares about your success, your chances of being successful are going to be much higher. By the way, where do you get one of these people? Mentor was never even used as a term 20 or 30 years ago. You meet people. You might go to chamber events or Rotary events. You might be in a club. There's lots of entrepreneurial groups now. The good news versus when I started out is the entrepreneurial community is much richer than it used to be. So you'll find people who will help you. And by the way, there are tons of entrepreneurs who built companies, they sold them, and they're not just hanging out, but they have extra time and they might be willing to help you out. But I would never start a business without a mentor. I would really recommend that. The next part is developing a product. There are no generic steps to developing a product. You might need a prototype. You might need a final product that you can sell. You might need a patent. Um, and it's really totally contingent on your product. I really can't, in the confines of this course, talk about a product that is really going to be exclusive to each of you. But, it's definitely a consideration. You got to think about what you have to develop. Another consideration when you're actually going to begin is, should you have a business partner? What are the pros? One, you can supplement your knowledge. You may think you know everything, and I did when I was younger, but you don't know everything. You can supplement your knowledge and get feedback from other people. So in that way, you have a sounding board. You can also combine financial resources. I don't want to overdo this. I don't want all the sections to be blended together. But remember when we talked about morale and we talked about how hard it was to quantify that and how people get discouraged when they start businesses. If you start a business with another person, you've got a sounding board, you've got a friend. For every Gates, there's a Paul Allen. For every Steve Jobs, there's a Steve Wozniak. For every A, there's a B. In my company at SageWorks, it was me and Sarah Torville. So I like when you have people involved in your business who you can kind of be friends with, frankly, and build something together. Some cons to it. You might disagree. Radical, but you might not agree with everything that partner says. That's going to happen. The other consideration, and this is important, whenever you get into business, it's hard to do this, especially if you get into business with a friend. But whenever you get into business, always think through how you get out. There should be a way for people to part. And that's why I don't think you always need a lawyer for everything that you do. But it's probably wise if you have a partnership or a company that has stock, which stock certificates is a corporation, you probably want to think about what happens when the partners aren't getting along. Picking your business partner. Number one, integrity. We should just stop there and end the whole program. If you are going to go into business with someone, they have to have integrity. This goes back to Latin or Greece or some old civilization. Integral, integrated. Is the person integrated in their thinking? Do they hold together in their ethos? Do they have an ethos? The reason integrity is so important is because there's going to be opportunities every day for people to do the wrong thing. It's amazing. That's why, and I don't want to get on too much of a soapbox here, but it's super important. That's why there's almost this notion that people who make money are bad people. And I'm sure there are some people who are bad, who make money. But the people I know who have done real well in business have integrity because they're doing the right thing, because it's going to be noticed by employees, it's going to be noticed by customers, by bankers, by accountants. So if you get into business with someone, they have to have integrity. They're not going to be perfect, but if they don't have integrity, they're out. And that mistake is made by tons of people. Get someone who complements your talent, not supplements it. When I started SageWorks with Sarah Torville, I came up with I was the mastermind, and that's using that term very lightly, but I was the person who developed the expert system, and Sarah programmed it. If I'm starting a business and I'm good in sales, I don't want someone who's good in sales. We already have that checked off. So generally, your partner should sort of complement your skills. It's a peanut butter and jelly type deal. Someone who will work as hard as you do. Well, we have to put that one in there. But the truth is that that's going to be rarely the case. There's usually going to be some person who's a little more driven, is going to work a little bit harder. So I would change even our phraseology. They have to work relatively as hard as you do, like in the range. But certainly don't start a business with someone who's lazy and wants a 40-hour work week, because that's not going to work. Unless you're that way, and it's doubly not going to work. Someone who balances your personality type. Very interesting. Really interesting. Type A, type B, C, D plus batteries. I don't really know the categories. I would say I'm going to speak about myself and then get off me quickly. I would say I'm like a type A person, probably. Some people would say that, whatever. I probably need someone a little bit more understated and a little bit more low key. It would be tough, probably, for me to be in business with somebody like super intense. So the personality balance between you and your partner is a big deal. The last one in about partners or determining how to pick them or whatever is determining the financial compensation. Usually that's going to be a function, by the way. It's not as hard as it might sound. It's usually going to be a function of the percentage ownership that each partner has. And so if you've got a corporation and you own 70%, probably 70% of the financial benefit will accrue to you. But things happen, and I guess before I go on to the next point, I would say try to get into business with somebody who works things out, because there's going to be times when you don't agree with your partner. On that note, suppose things don't work out, which you have to assume. Whenever you go into business, you assume that things aren't going to work out. There should be some type of buyout agreement or some type of pre-arranged agreement. If you haven't noticed, working things out with people after you hate them or they hate you is usually a lot harder than when people like each other. So the strong recommendation from the course is to work out some type of legal separation before you even get into business, because once nerves get frayed or people disagree, boy, you really got a mess. One of the next things that you want to look at when you start a business is what permits and licenses are needed. If I'm painting houses, I might not need a permit or a license in a local area. If I'm a doctor doing open heart surgery, you may need a medical license. So each business varies. This is what our recommendation is. Go to the Chamber of Commerce in your area. Go to the local government, right? It might be a city or a town. Go to the state, go to the IRS, go to the SBA, go to the Department of Commerce, and generally you'll know what type of licenses you need. Don't kill an ant with a tank, however. If you're out just cutting lawns, don't spend a month figuring out what licenses you need. It's amazing how many people do that. It just makes me crazy how many people waste so much time on that versus getting customers. Business plans. You're taking a course that's given by entrepreneurs who don't believe in business plans. So we just have to state our bias up front. We are not saying we're right, but we're going to address business plans just because we know that we want to be responsible. The reason, before I talk about what should be in a business plan, the reason that we're not huge proponents of business plans is because the day that you write the plan, or the day after you write the plan and you go into business, all the data is going to change, which negates the business plan. But I would say this: if you're starting a business that is not super simple to understand, if it's a little complicated, certainly if you need investors, you might need a business plan. And just the personal discipline of writing that down will get you to start to think about things and frame some of the challenges that you have. I guess our big beef, or my big beef, I'll speak for me, is that I have an MBA. And sometimes, a lot of times when I look at the course curriculum of the MBA programs, it's like writing a business plan. And that is not being an entrepreneur. That's writing a business plan. That's not starting a business. What are some common components of a business plan? There are lots of places you can go to get sample business plans. They're all over the internet, and most of them are fine. But most of them have the following sections: a description of the product or service, a description of the management team, some type of demand or market analysis. How big is the market? How can we price? How much can we sell in the first and second years? Marketing and sales plans. How are we going to get customers? I always like to include a section in the business plan on the major challenges to the business. I would never invest in an entrepreneur. Doesn't have to be in a business plan, but I would never invest in a business if the entrepreneur didn't know what the major challenges are going to be to being successful, because there's going to be challenges. Just because there are challenges doesn't mean the business is not good, but I like to see them listed out in the business plan. Finally, there should be a good financial analysis or projection where you go month by month and you show money in and money out. And that usually in a business plan, there should be a financial projection for at least a year, if not 2 years. So now we're going to talk about capital needed to launch your business. The amount of capital that you need largely depends on the type of business you have. It's also going to be a function of like how much money you need to live while your business is sort of growing. If you're going to start a pharmaceutical company, you're going to need a lot of capital, and it's going to take you a long time to get that business off the ground. If you're going to start a lawn service, you're not going to need a lot of capital because you're going to be able to make money really quickly. Although even then, you may need a little capital because it might take time to get that lawn service profitable enough to pay your living expenses. What technologies are needed to launch your business? Again, this totally depends upon the kind of business you're in, but the thing I would say about technology, in my experience, is most people overbuy technology when they first start out, and they don't need it, or they kind of need it, but it's too expensive. So I'm always really deliberate about thinking through the very minimum amount of technology that's required to start the business. Most businesses require, not all of them, but a computer. It would be hard today to run a business without some type of computer. If you were running a painting business, you might not need a computer the first day, but you probably need some type of computer. You need access to the internet. Where people go astray is when they have a little capital and they put the capital in a business and they start spending money on things like a CRM system before they even have customers. So you have to be judicious. The general rule of starting a business is keep your overhead very low. Professional services needed to start a business. Professional services are services by professionals. And what do you need when you're starting up? The first professional service provider that you need, I think pretty early, as soon as you start generating revenue, is an accountant. That's the one professional service provider that I recommend that you get very early on. It's not just because you don't want to get in trouble with the IRS or the state in which you live, but you want to start keeping track of your money and knowing how you're doing financially. You also want someone who's going to help you and give you advice. Accountants are the most underused or the least used resource available to businesses and entrepreneurs that I know of. Most accountants have hundreds of clients and they've seen all the mistakes that people have made. So get an accountant, make sure they have experience, and try to tap into their brain. You may need a banker. You probably don't need a banker early on, especially if you're not borrowing money. But there is a rule about banking. There's a couple of rules, actually. One rule is banks lend money to people who don't need money. That's actually true. If a bank lends out $100, they can only lose $1. So I hear entrepreneurs talking about how bankers are stingy and they don't believe in them. Bankers are not venture capitalists. If they lend out $100, they can only lose $1. So they have to make very safe loans, i.e. loans that are definitely get paid back. Two is if you're going to borrow money at some point in the future, you don't want to borrow money and do so the first time you meet that banker. So when you set up a checking account, go talk with your banker, introduce yourself to build a relationship. Lawyers. It's really hard to talk about lawyers as professional service providers, and here's why. We are teaching a general course on starting a business. Whether you need a lawyer or not is really completely contingent on the type of business that you're starting, the complexity of the organization, and the structure. But you may need a lawyer, and that's the way we're just going to have to leave that open. I will say this, though, before I get off the lawyers, because I have to give one dig against lawyers in every section we refer to them. A lot of people overdo it with lawyers and then legal expenses before they really need lawyers. Like, I guess a simple example would be, if I'm starting a painting business, do I need that to be a corporation the first day if I have no assets? You might. Personally, I wouldn't. I'm not telling you not to get one, but if you don't have any assets and you're just painting houses, you might not need like a corporation with stock certificates. So it's really a matter of personal propensity and risk of the business. Depending upon your business, next up is insurance agents or insurance. You may, if you have employees, you're going to need workman's comp. If you're a general contractor, you're going to probably need liability insurance. Again, though, make sure, and this is a skill, I wish we could cover it fully in this course. I don't think any course could cover this. You want to layer the complexity of administration into your business at the right time. Too many courses like this recommend all this stuff up front before there's even a customer involved. And I'm definitely not a proponent of that. Picking a name, really interesting. Your name might reflect what you do. I think here you see we recommend that. I think that's a good idea. But it doesn't necessarily have to, but it might reflect what you do. The name should be original, and it should be easily searchable, therefore, on the internet and through social media. That is why, by the way, that people put, especially, I shouldn't say especially in technology, but that's why a lot of people put a lot of time into coming up with a name that's unusual, because in search, you want your name to be unique so that when the name is searched, it's the first result. I've made this mistake a couple of times. When I started SageWorks, which I really like that name, by the way. Sage for wisdom, works like DreamWorks or whatever. And we combine them. SageWorks is a nice name. SageWorks being wisdom, software that creates wisdom. But the truth is, it might not have been the best name, because when we got out to market in 1998, even then, we weren't the only SageWorks out there. And really, you want to be the only company out there in search. Be aware of the potential associations a name carries. What do you think of when you think of that name? And this gets into brand. You want the name to connote, to give you a feeling of something that's positive about you or your business. In the next section, we're going to talk about company structures. And before we do that, really, I want to talk about, what goes into the type of company structure that you might want. The first one would be complexity. If you have a very simple business with very little risk, and there are businesses like that, you might want to be a sole proprietorship. A sole proprietorship is just you. If your business is complex or there's a lot of risk, you might want to start as a corporation. So the other consideration that you want to think about is the risk of the business. If the business is real risky, you may want to be a corporation. You might want to be an LLC. It really depends upon your business. This section is a little painful for me because I don't really know where to tell you to go to make this decision. A lot of experienced entrepreneurs just know inherently whether they should be a sole proprietorship or a corporation. I will give you a personal propensity, a desire, or finding, whatever it would be. I like businesses to start as sole proprietorships because they're easy. But let's go through them. A sole proprietorship is basically you. You are the business legally and otherwise. The reason that I like sole proprietorships is because um, literally you could use your social security number as the business and submit your taxes. It's called a Schedule C. You provide your 1040 at the end of the tax year, and you attach a Schedule C, which is your profit loss statement, and that's all you need to do as a sole proprietorship. So most businesses are sole proprietorships for a reason. They're very simple. The downside of a sole proprietorship is the business is you. So if you were running a tree service and you were cutting down huge trees, um, a sole proprietorship might not be the best form of business because trees fall, and sometimes they fall on things, and sometimes they fall on valuable things. So in that case, if there was some type of liability, you would be liable personally. But I do like sole proprietorships because they're simple. A limited liability corporation, they were not invented too long ago. It's sort of a hybrid entity between a sole proprietorship and a corporation. There's no stock certificates, but what I like about LLCs is that the owners are not liable for debts and liabilities. You're kind of a separate entity. If you do have an LLC, you will need an EIN number, an employer identification number. Corporations, invented in the early 19th century. A lot of people don't realize that corporations are relatively new in at least world history. A corporation is a separate legal entity from you entirely. The way I describe it is it's as if the state in which you lived gave birth to this business entity that's completely different from you. Corporations have stock certificates, they have separate boards, they have bylaws. They are more complicated to run. But if you're running a business that has risk, it's complex, and most importantly, if you want to raise money, you're going to be a corporation. I won't get into schedule S corps and C corps because those are tax issues, and we've already covered that. You need an accountant, so that's not the purpose of this course. A partnership is a structure where two or more people get together and they split profits. They still have legal liability as individual partners. I remember studying this, I can't attest to this fully, but I believe partnerships fail at a greater rate than any other legal structure. So, be that what it is, but that's a partnership. The next thing that you probably need when you're starting a business, it would be good to have a business bank account so you could put money in it. Every business that is in existence has a checking account or a savings account, but you're going to have to write checks or transfer money, so you need a bank account. Make sure you get a separate business bank account from your personal account. We want to keep those things separate. Even if you're a sole proprietorship, by the way, because it's not a matter of legal liability, but you want to know how the business is doing versus you. You don't want to commingle funds. It's not just a matter of legal liability. It's a matter of being able to track your expenses and your revenues separately. Business insurance. It depends upon the business that you're in. I mean, some businesses might not need any insurance. Some businesses need tons of insurance. Again, you kind of have to know your industry. The next thing that you're going to look at is pricing. A couple of general notes about pricing. People typically price incorrectly in the beginning. People typically price low or too low. Now, what I love about this course generally is whether it's me or the other entrepreneurs who are teaching you who are better than me, it doesn't really matter. The reason that we are passionate about what we're teaching you is we've made every single mistake, or at least I have. So here's a mistake people make a lot with pricing. They price low to get customers, and they get them. And then their overhead, their fixed expenses go up, and then they have to raise their prices, and then those original customers go away. So in my experience, people price too low in the beginning for too long. It does not mean that you can't start with low prices, but very quickly you better move to market prices. Otherwise, you might end up losing your customer base. How to price. We're going to cover the different methods of pricing, but really the truth will not only set you free, but the truth is obvious. The only price that matters is the price that a customer will pay you. That's called the market price. All prices in the market are set by the market. In other words, they're set by what customers are willing to pay. So you have to do research on this. You have to look at what competitors are charging, and you can ask customers what they're willing to pay. Another method that is used for pricing is called cost plus, which means, let's say it costs you $10 to make something and you want a 50% profit. You would, I think that's $5 or whatever. You charge an extra $5 and you make 50% profit. But again, that method, cost plus, only works if the price that you come up with is lower than the market price. In other words, if your cost plus your desired profit exceeds the market price, your business is still going to gravitate down to the market price. But it is helpful to know that kind of stuff. For example, there are businesses out there. I used to do a little bit of consulting. There's businesses out there and even industries where it's not statistically possible for them to make money at the market price. So it's always good to know what your costs are, because if you look at your costs and you add your desired profit in and you can't get that in the market, it might not be a good business to get into.